What's going on, guys? Welcome back to the Coinist Podcast. I'm excited to bring you this episode this week. It's a topic that gets thrown around so much on Twitter, on YouTube. I'm sure you've heard it in a ton of podcasts. It's alt season. Why is everyone always calling for alt season? What an alt season even means, what it would look like, and what we break into in this episode with Delphi Digital, one of my favorite research teams in the space. They put out incredible research. Every single piece they put out, I think you should be checking out. I enjoy it. I learn something new nearly every single week. I speak with Liberman, one of the co-founders of Delphi Digital, about alt season, right? What are the dynamics in place that would have to happen for an alt season to occur? Something, things that you can be thinking about or taking into consideration past the chart. You might not even need a chart to see some of these characteristics that would potentially signal or hint to you there's going to be an alt season. We also look at what leads certain alt sectors to do well, why there's been such a boom, such an interest in these exchange coins relative to other altcoin sectors, right? Also comparing, top 10 altcoins to other altcoins, everything in between. This is a very alt-focused topic, alt-focused discussion, alt-focused episode, and it's a really nice contrast to what you might often see on Twitter or YouTube, which is just, which top 5 coins are going to moon, or someone showing a chart and saying it's going to be alt season. We dive into what that even means. As an investor, these are the things that you have to be thinking about, especially as a longer-term investor. It doesn't even make sense to be investing in altcoins, or are they just trades, right? What are the opportune times where you can think about whether or not something is actually cheap, or if it's going to be 90% cheaper in a few months, right? This topic, incredible discussion. Delphi Digital, thank you guys so much for making it happen. I like working with this team so much that I'm honestly interested in maybe having them on as a monthly show. So everyone, let me know in the comments. If you watch this on YouTube, let me know what you guys think. If you're listening to this on iTunes, leave a review. Let me know what you think as well. And if you enjoy it enough, we'll have them on every single week to talk about their research. I think it'd be a good idea, but I'm curious to see what you guys think. Before we get into the episode, I do have one quick message from the lead sponsor, and that's Bybit Exchange. In a market where we have to be talking about whether or not there will be an next alt season, and where Bitcoin is really the only game in town for a lot of traders, for a lot of investors, right? It's the only asset that's volatile enough, that's actually giving action, is actually trending anything other than straight down, right? Like altcoins, you need to have an exchange like Bybit to be able to trade Bitcoin and ETH and EOS and XRP both directions if you are going to trade alts, or be able to hedge, right? So Bybit Exchange, if you haven't checked them out, incredible exchange that allows you to do just that. They have leverage. You're going to be very comfortable on their platform. If you've used anything like Binance or BitMEX, it's a very easy transition, easy to use interface. They also have a support team that's very supportive and receptive to anything that you want to see done, right? No overload. They just got added to TradingView. So they're solving the problems that traders want fixed. Also a very supportive team. And if you do check out the platform, you get a free $10 just for signing up on the link right down there below this video. If you're on iTunes or Spotify or listening to this on SoundCloud, hop on over to my YouTube. Right below this video, you'll see the sign up link. It is trading.bybit.com/venturecoin. So you get a free $10 just for checking out the platform. Right? So if you do want to check it out, trade Bitcoin, Ethereum, EOS, XRP, all those both directions with leverage. Very easy to use platform. It's on TradingView. You get a free $10 for doing so. Use my link right down below. Bybit, thank you for sponsoring this episode. And without further ado, guys, let's jump into this one. I enjoy it a ton. Let me know what you think. Smash subscribe on iTunes, Spotify. You can't miss this. Next week, later this week actually, I have another episode coming out that you cannot miss. Everyone's talking about physically settled Bitcoin futures. What does it mean? Is it positive for traders? Is it positive for the market? Is it good for Bitcoin? I have on an exchange that's already doing it ahead of Bakkt. I think you guys are going to enjoy that one. But first, we're here to talk about altcoins. We're here to talk about alt season. Last time this team was on, they called the Bitcoin bottom back in December or January. Not enough people listened. I hope you're listening now. Enjoy the episode, guys.
You are listening to the Coinist Podcast.
We should be live right now. Today I'm joined by Yan. What's going on, man?
How are you? Thanks for having me.
Yeah, of course. Last time I talked to Delphi Digital, I was talking to one of your partners, Kevin, and we were discussing your guys' Bitcoin report. It was an analysis on Bitcoin UTXO, and back then, I'm not sure enough people listened to that interview because you guys called the bottom in December or January, and that did in fact turn out to be the bottom, at least for right now. Is there anything that we're going to talk about today where people need to tune in? Are you calling another bottom or anything like that, or what's going on?
Yeah, I think in terms of a cyclical bottom, I think it's easier to say that was the bottom now than it was back then, and there's no reason to kind of think otherwise. Especially just looking into the underlying move. So just quick background, the whole point of that, analysis was, rather than forecasting a price bottom, we figured out a timing for the bottom by figuring out when we think selling pressure from long-term holders would kind of abate. And so by looking at age bands within UTXOs, you can see when Bitcoin was purchased, when it was moved. So moving it creates the UTXO, and that's basically functions as a proxy for selling. And so you can tell, how long ago Bitcoin was purchased, and then when it is moving, who's selling. So whenever somebody moves it, it goes from this older band back to the beginning. And so you can do this really meticulous day-by-day process to figure out exactly when the moves are happening. And so back then it was apparent that we were having, a lot of the longer term holders that sold off, and some of them sold into the rally and some of them sold past the peak. But the important thing to keep in mind is that they've been holding for 3 to 5 years. So they're well into the green at this point. And so they're going to start selling on this decline. And then that's kind of where we saw a lot of that selling pressure post peak. And so once we were able to realize, or able to understand when we think that they're effectively done selling, and one of the things you can kind of use is you can figure out how many coins were lost, and then start to back into exactly what portion of each band contains live coins, and realistically which portion of those is more so lost. And so we were able to figure out, once we saw that these longer term holders are really there wasn't really much selling going on from them at that point, we were able to kind of understand that it's not going to take a lot of incremental demand to help support price at this point. And so you have your natural sellers, which are miners, and then you have the traders. And so once we realized a lot of the long-term holders are done selling, now the amount of demand to help create this floor wasn't really that significant, and that's kind of how we landed on it. And in terms of where we are now, which is definitely, I think we've progressed in terms of price a lot faster than most expected, us included. But what's interesting is you're still not really seeing too much selling from those guys. The 5-year band is not moving too much, but like an overwhelming majority of that is just lost. 3 to 5 is still holding strong. 2 to 3 is barely moving. A lot of the selling, especially over the past 6 weeks, has been from 3-month to 18-month holders, and so you kind of group it into little 6-month intervals, and so that's where the overwhelming majority of selling is coming from. And when you have these long-term holders sell out, one of the things that's interesting is that you realize, all right, these guys bought in. They weren't buying in November, December of 2017 because they saw it on TV. These guys have been in since 2013, 2014, 2015. Yep. And once you realize that, to get in at that point, you have a lot of conviction in Bitcoin. You're here for the long haul. It's some people might be completely out, but for the most part, to get in that early, you kind of believe in the underlying premise. And so you start to realize that these guys are selling well into the black, but at the same time, all that cash that they're basically selling into is now dry powder on the sidelines, because for the most part, they have the intention of reinvesting at least a portion of that. They're not completely done with Bitcoin. So you start to realize that once those long-term holders sell out, they almost function as support at this point, because they're kind of waiting for a better entry because they realize that we're on the tail end of a cycle, and they've seen it happen before. And so that like all of that kind of factored in. And right now, you're not really seeing too much of these long-term holders selling. One of the interesting things we've been watching is looking at liquid supply. So liquid supply, we just measure as coins that are moved within the last 3 months. Okay. And that's always in one of our recent reports, we posted a chart where we kind of show the Z-score of 90-day rolling volatility. So kind of normalizing it and comparing that relative to the quantity of liquid supply. And so you start to see that liquid supply really picks up during points of significant volatility, and kind of dies down when volatility is a lot less than it normally is. And so we can almost use that as a form of proxy. So I know some people are worried that, or the very draconian outlook that we're set to drop to new lows, and kind of like this is a broken cycle almost. And one of the things that really helps alleviate concerns there is understanding that we're not. It's still a lot of short-term and day traders that are really moving the markets right now. It's supply coming in from long-term holders. So you can kind of judge based on the magnitude of increase in liquid supply, how much, like what kind of downturn you almost expect, because once you see this supply flood the market, you need a lot more demand to offset that selling. And so the idea that I think we're on a broken, you can use TA and assume that, if we break below certain levels, the fractals break and so on and so forth. And so to say that we're going too much lower from here, I don't think is reasonable. You can get some aggressive selling where, right now you're starting to see, I think it's pretty interesting. We battled to 12,000, between that 11 and 12,000 mark in the beginning of August, back and forth. And you were seeing a lot of volume when we were at 18, 19, and 1,800, 1,900, 12,000. And so you're seeing a lot of demand come in, but as we're starting to fall, it's just kind of a situation where nobody wants to catch this falling knife. And so that's kind of why you have these volatile wicks, is everyone's just trying to get the best entry. And so we probably haven't really bottomed yet until we see a dip that's followed by significant volume, because it's been a lot of like anemic volume and on these selling.
That makes sense. With the people that missed the first episode and what Yam was just talking about, their UTXO analysis, which came out well before the bottom. I think the bottom, you guys, your thesis was it would happen sometime in Q1 2019. That report got published in November, December, I believe, sometime in December. And then the bottom did happen, which is why I jokingly said, are you gonna give us something again that a lot of people might have missed out on? Thinking about that UTXO analysis, and you might have just touched on it, I might have missed it. You're looking at, different groups of how long people have held and whether or not those coins are moving. It's very helpful, obviously, in terms of picking inflection points on the chart for kind of a macro trend of, is this a potential bottom versus, maybe there's longer term sellers which have been around since 2013 selling out that might, mark a more macro or long-term top. Is it as helpful for shorter term trends, or is it really just kind of helpful for the inflection points? Like right now, I know you said you aren't seeing those longer term sellers selling right now, but how much is it helping on kind of a day-to-day? How much does it help on a month-to-month? It's obviously probably much more helpful on a longer time scale, something like a quarter out or the year out, things like that. Is that right?
Yeah, I think it's definitely a lot more useful to kind of pick cyclical highs and lows rather than intra-cyclical moves. I think one of the more useful things for it in terms of the intra-cyclical moves are understanding, is there a kind of room, is there a reason for concern? If we were seeing a lot of these holders start to move out and price start to dip, that's when you'd kind of start to worry, because it's odd to see these individuals start to move out, and also you'd need a lot more incremental demand to start coming in as these whales start moving out of position. So I think in terms of the short-term utility of it, it's more of a gut check and kind of a way to kind of give yourself comfort to an extent, and just to realize, where is this coming from? And I think one of the useful kind of takeaways we've been able to leverage from it is coming up with an adjusted NVTS metric. So one of the issues nowadays, especially more recently, is that on-chain indicators are kind of losing their merit to an extent, and they're less prevalent, less accurate. A lot of them are kind of screaming overbought because you're not having the sizable on-chain volume to help support the market cap that's necessary. So the first metric that you had your original NVT, which is just market cap over on-chain volume. Then there was the NVT signal, which was a great modification where rather than doing today's market cap over today's on-chain volume, you take the 90-day moving average of on-chain volume in the denominator. And the idea there is that whenever you see sizable price run-ups, that's usually followed by on-chain activity, but that on-chain activity is a bit artificial in the sense that it's typically just people moving Bitcoin to exchanges to either trade or sell. And so it almost looks like, if the numerator and denominator are both going up, it's not really, it's not expensive, so to speak. But the thing is, these indicators they're all relative. The idea is that there's some level of mean reversion. And the problem is that, Bitcoin has kind of changed over time, where I think your incremental new user is going to be using it less for purchases than I think the existing user base right now. I think especially as you're starting to see less retail and more institutional money start to move in, they're purely buying it for the digital option on gold, or option on digital gold, and kind of that narrative, and as a speculative sort of value in its current place. But and what that implies in terms of that metric is that you're going to see market cap appreciation, but you're not really going to see that much on-chain volume. Yep. So what we try and do is, what we've done is we use the NBTS, but we multiply the on-chain volume by liquid supply. Or sorry, we take the market cap and multiply that by liquid supply. So the idea being that rather than looking at the entire network relative to on-chain volume, we look at the portion of the network that's used to support on-chain volume over on-chain volume, and that kind of helps normalize it and alleviate some of the risks of like just general skew higher in all these metrics, because on-chain volume just isn't keeping up with market cap. And so that's kind of one of the things we've been able to leverage the UTXO analysis for. But in the meantime, it's just honestly helping to figure out who's really selling and where that pressure is coming from.
All the research you guys put out is fascinating. I'm going to let you give a little background on Delphi Digital. And I'm glad you brought up that, sometimes these metrics and sometimes these tools that you're using are really just kind of a gut check. And one thing that I think people need a gut check on right now is for altcoins, which is what we're going to talk about in today's show. But first, I'm going to let you give a little bit of an intro on Delphi Digital. I know Kevin did it last time, but for people that are unfamiliar, what's the best way to describe it? I've tried to describe it as I don't know if there is too many buy-side research firms in crypto. Funds sometimes act as them, like an exchange can kind of act as one, but you guys are almost a little bit different. Like, how would you describe Delphi?
Yeah, so we try to do sell-side institutional grade research and consulting, and kind of mimic what we've seen, what basically the environment that we came from. So our backgrounds were in traditional finance, ranging from equity research, personally myself and Kevin, to leverage finance, and we thought that there was a bit of a gap there, and so we got into the space as investors in late 2016. Obviously heard about Bitcoin before, during the Silk Road days and all of that, and never unfortunately took a deeper dive into it. And I can imagine there's plenty of people that are kind of suffering from the same situation, and so it's getting harder and harder to ignore. But so what we've tried to do is bring our backgrounds in that space to help produce credible institutional grade research, because we realize that if the space gets as big as we need it to be, or as we believe it can be, part of that is going to be relying on having institutional money really move in, and it's tough for them to allocate capital without having this checklist of things that they need, whether it's custody, regulation, and one of them is having a digestible, investable takeaway that they can either present to their boards, their PMs, and really justify some kind of evaluation or the value proposition of an investment in the space. So that's kind of what we try and bring to the space.
It makes a lot of sense for people that are also thinking about what that research looks like. On Twitter, people kind of just get flooded with charts and they think that's the research, or sometimes they see BitMEX research also does some really great write-ups. What would you say your research is mostly quantitative, fundamental? What's the mix so that people can understand? And then we'll dive into the alts.
Yeah, absolutely. So we offer kind of a variety of products, and so they I think the type of research will vary there, where we'll have weekly market commentary, and that ends up being price related, not necessarily only focusing on Bitcoin, but Bitcoin usually ends up taking all the attention. And what's the theme this week? What's happening with prices? Why? Always try and tie it back into global macro landscape and kind of global asset picture, because none of this really operates in isolation, and as it gets bigger, it'll be more intertwined. So really understanding those relationships, I think, has a lot of value. And so we try and definitely focus on a more quantitative, or like a more quantitative perspective. And so being a completely independent, objective shop, we're able to publish our opinions and kind of naturally stay objective, which is something we value. We always try and, especially with we do individual token reports for our institutional subscribers, and in those reports we always try and create economic models where we'll value the token. Part of I think that's one of the more interesting things about the space is that, coming from traditional finance world, everyone knows the same three statement model and you're debating the assumptions.
Yeah.
Whereas here you're trying to really build it from scratch. No
Yeah.
one knows what's right, what's wrong. There's a lot of really smart people putting out great stuff. And so it's always really interesting trying to, read as much from them and learn and try and incorporate that into our research. And honestly, for these models, the biggest takeaway isn't necessarily the output, but it's more so understanding how the underlying mechanics affect the valuation and kind of really understanding what's the potentially best setup for some of these tokens to help accrue value while maximizing security and not really creating any hurdles to use.
Yeah, I'm glad you said that. And from a team, your team, most of you guys came from traditional finance, like you said. I think you worked at Bloomberg Intelligence with Kevin and Tom as well. Coming from traditional finance, you have Pomp on the team coming from a more traditional background as well, versus some teams which are crypto native. Thinking about, I'm glad you brought this up. In traditional finance, people are arguing about those assumptions. You have a few models and everyone kind of agrees. And that's why the markets, I would say, are more efficient than they are here. Even if they're not completely efficient, they're more efficient than what we have going on here. For altcoins specifically in crypto, things get even a little bit more silly because I think Bitcoin maybe we're closer to having some models, and obviously there's still not an agreed upon way to value it, and people are still trying to figure out what it even is. But for altcoins, we're in kind of an even stranger time. And in 2019, we've seen just a continued sell-off. And I'm talking about versus Bitcoin. Obviously, the dollar value will go up if Bitcoin goes up. But 2019, we really saw a sell-off. People are still wondering, is there going to be an alt season? 2018, I guess you could say the beginning of the year, there's a month-long uptrend, and then in May and April, there's an uptrend, but pretty much just a sell-off. Are we going to see another alt season again? What are your thoughts there? I know alt season means different things to different people depending on when you got in, but in terms of a cyclical uptrend for alts, you have a lot of people saying, look, it's just never going to happen again. I don't think that's true, but what are your thoughts there?
Yeah, I agree. I don't think to say that it'll never happen is tough. I think what you start to know, so there's been a lot of these mini alt seasons, some lasting like a day or two. So I wouldn't necessarily call that alt season. I think the real last alt season we had was March, where alts did really well.
Until April 1st,
then
the Bitcoin
until
breakup.
April 1st.
Sure.
Exactly. And so, and the best thing you can kind of take away from that is just understanding what are the market dynamics you need in place to help create an alt season. And so on one end, you think about who's the incremental alt buyer first. And so it's typically going to be retail, and the issue is that a lot of the increment, like there's a lot less incremental, or rather the percentage of incremental money coming in from retail is a lot smaller now than it was before. Part of that is just, there's just not a lot of retail coming in. And the other half is you are seeing a lot more institutional money come in now than you did in 2017. And it's hard enough to get institutions to wrap their mind around Bitcoin and see these, traditional investors to kind of justify the value proposition. So once you even go beyond that, it gets considerably more difficult. So you're just going to see a lot of the money kind of flow into that. And the problem is it creates this kind of cycle of reflexivity where if you're already in the space, you think about, all right, well, where's the incremental dollar going? Well, I need to be in that. And so it creates this difficult situation where there's not a lot of new buyers for alts. So one of the kind of dynamics you need is flat Bitcoin. We've seen, Bitcoin goes up, alts don't do well, Bitcoin goes down, alts don't really do well. And so the only time where we've really seen flat Bitcoin was March. We were past the bottom and everyone's getting a lot more comfortable. It was crypto spring, and we were grinding up through 3,000, testing 4, and alts were having a field day. You were seeing some ridiculous returns, 5-10x on some of this stuff. And so the second Bitcoin then broke through 41 April 1st and just started heading towards 5, alts took a beating. And so everyone kind of knew, because I think at that point everyone's thinking back to November of 2017 when Bitcoin really started taking off. Alts were not doing well back then. Alts really did well like second half of December, first week of January. That was peak. And so what happened there was you saw a lot of money in the space. People were taking profits from Bitcoin, or people were kind of getting impatient and greedy and thinking, all right, well, my returns on Bitcoin are a bit limited. I see a lot more upside in these alts. And so alts have done well at like the tail end of a cycle, which I don't think we're anywhere near right now. And in times when you don't really see a lot of upside with Bitcoin. And so right now it's tough to see a situation where you get a prolonged alt season. You could be, a week or two where Bitcoin is flat and very range bound, and you can see, a bit of an uptick there, but it's tough. It's tough to really justify, especially on like a risk return basis relative to Bitcoin. It's tough to justify allocating money to alts.
Yeah, I'm with you. I've been trying to label it instead of alt season. I think psychologically it does more damage to people's portfolios than alt season will help. Is I've been trying to call them alt windows. So people stop just, there's this notion that if you time the alt season correctly, and if you call it on Twitter, it somehow boosts your portfolio. But if you if you time it correctly, that you can just buy alts and then 2 months later you wake up with a 2x. I just, like you said, the environment that would support that happening just isn't here yet. It would either need a Bitcoin with very little volatility, or we would have to be at a stage where Bitcoin has moved such a large amount that it brought such interest to the space where new retail entrants are kind of popping in left and right. All of a sudden there's a renewed interest on can this coin become the next Bitcoin, or what's this alt sector's potential, all those different things which are kind of not even talked about right now. We're just not there yet. And so I think viewing them as a window, maybe you have a 3-day period where alts can perform well. Maybe you have a week-long period where alts can perform well as a trade, but as an investment, like you said, it's tough to find that much space. If only windows have existed this year and continue to exist for this year, and we don't get an environment that supports alts for a whole cycle, can you make an argument? I mean, even looking, let's look at an XRP chart since 2017 or 2018 or whatever it is versus Bitcoin. It's all the way up and all the way back down. And I know it's gone up in dollar value, but so is Bitcoin. Same thing with these, same thing with a lot of these alts. Do alts make sense as long-term investments if they're just so cyclical? They'll have a ridiculous, 7x swing and then down 90% versus Bitcoin, and then 50% up and then 90% down. Does it make sense to be investing in them, or are they really only opportunities for traders? What are your thoughts there?
I think it's if you can take all emotion out of it, ideally they would be opportunities for traders. But I think people naturally kind of get attached. They think they found some gem, or they continue to think that they're dollar cost averaging down at this point. But you're just constantly catching this falling knife, and it's tough because you're just seeing, especially in a situation where Bitcoin's going up and it's painful. So you're seeing Bitcoin rise and you're just losing sats. So your portfolio might be flat on dollars, but like the space is bullish and you're not doing well. And it definitely creates this kind of tough environment. And so it really does make it difficult to justify alts as a long-term investment. The other kind of issue is that I think the current retail market is considerably more intelligent than the one that we saw at the end of 2017. And it's based on a few things. One is just survivorship.
Sure.
The other is companies aren't going out there and they're not able to capitalize on completely false promises anymore, and just we're going to revolutionize the world, and people kind of see through that. And so now there does need to be some level of adoption, or it just needs to be an incredible narrative. And so for kind of what we've seen is that the only real way to play alts has been, we had the theme of exchange tokens, and that's kind of diminished. And then also just new offerings that come to market. And so, you saw what happened with Algorand, and, people were buying the liquid tokens, buying the SAFT, using the put on the SAFT to sell the token. And so it was just a lot of institutional money, trying to get intricate and cute with these plays and hopefully take advantage. And even Tezos, so you've seen listings have diminishing effects where
Coinbase
anyone buying in. People buying in. It is because the thing is, I think the general understanding is that people buying into this Coinbase or to this listing realize that once it's done, it's going to kind of come back to where it started. And so as more and more people start to believe in that, you start to see smaller and smaller pumps, because no one has any intention of actually staying in. It's just a kind of game of musical chairs where you kind of ideally would set a mental stop loss, but realistically, people are just trying to get in and get out on these swing trades.
quick intermission, quick message from the sponsor of the show that makes this possible, and that is glassnode.com. If you're investing in alts, if you're trading in alts, if you're invested or trading Bitcoin, you have to know about this website, glassnode.com. Click on Studio in the top right. There's no download, no nothing needed. You don't have to make an account. You can see everything happening on the blockchains that you're invested in and trying to understand. How much money is flowing into certain exchanges? How many new addresses are being created? How much money in Link or ETH or whatever is being sent around, so you can understand whether or not people are selling or preparing to sell or accumulating. All those different metrics, the fundamentals for this new asset class. Glassnode.com is the premier place for those on-chain analytics to help you understand what you're investing in, whether you should be invested, and also understand what's happening behind the scenes of maybe some relationships or statistics that you didn't even know about. Impress your friends with their charts, or just learn a thing or two and help out your portfolio. Glassnode.com. Check it out. Thanks for sponsoring the show, and hope you guys enjoy the rest of it. With that, if a lot of people, well, some people might treat them as investments, but not on purpose. If a lot of people are just trading these, and so far we're, for all of 2019, for nearly all of 2018, and who knows for how long going forward, if they really are just acting as, just a window to kind of play them in a short-term swing. Do alts provide a diversification benefit? Because some people investing in this space, they'll look at it and maybe approach it like stocks or approach it like the rest of their total net worth, their total portfolio, and they'll say, well, look, I don't want to be all in Bitcoin. Maybe I like Ethereum as well, and I like EOS, and I also like, two of these random coins on Cryptopia is not around anymore. I'm trying to think of a small exchange. I don't know. So whatever the new gem exchange is, right? Or I don't even know. I don't want to name an exchange that turns out to be a scam.
Yeah.
You have, everyone has their gems, right? So 2 gems on KuCoin, right? Everyone uses a KuCoin. Is there a diversification benefit from holding those alts? Or, since everything's so correlated, does that benefit, does that even help you? What have you guys seen there at Delphi?
No, I don't really think so. There's been a few kind of alts that have had minimal correlation. Binance BNB has been a pretty solid one where it's been, keeping that in your portfolio with Bitcoin has been great. It's outperformed this year, I think, still to date.
I think it has as well. Yeah.
And so there's value there, and I think part of it is people are thinking to what they hear in traditional markets, and in 2017 made all the sense in the world to kind of diversify because these things were randomly pumping. So like one of them pumps, I'll move that, and exactly. And so that made all the sense in the world. And I think people are just kind of hoping that comes back, but realistically, it ends up being not which alts you're in, but it's like, are you in Bitcoin or are you in alts? And kind of aside from these one-off idiosyncratic pumps that are listing based, they all kind of move in lockstep. And so the diversification benefits really aren't there. It's tough at this point. Kind of Bitcoin's more or less the only game in town.
So I struggle with this too, because I think I can understand, especially from, I talk to a lot of VCs and I understand their perspective, and I actually agree with it. Having all your eggs in one basket, especially if you're investing that large a portfolio, doesn't make sense. You can't be all in Bitcoin, even if Bitcoin has the greatest chance of being kind of the winner takes all. At the same time, is being in alts, does that actually increase the risk? Is it like anti-diversification here in crypto? Does it increase the risk of your portfolio if I'm spread into 5 or 6 other alts? Like, have you guys ran the math behind it?
I think just even if you just think about how they've been performing, it's tough because you've seen significantly more downside beta than you've seen upside beta, and so you're not really getting that diversification benefit because Bitcoin, whenever it really moves, there isn't really an opportunity for you to do well. So it's like it's tough to think of an environment to justify a sizable allocation to alts. I think there are certain situations where there could be potentially undervalued ones, and that's kind of what we try and do with the with our token reports is look into what we think is actually gaining traction, where we're seeing any kind of adoption, and using that information and projecting it forward, based on a variety of circumstances. But it's tough to do it with something that hasn't launched anything at all. And so what we try and do is figure out, where there's a discrepancy between price and adoption. And part of it that's difficult is everything is still relative. So to say that, this coin has a lot more adoption than this other one, but it's worth a lot less, that doesn't necessarily mean that it's undervalued. And so that's kind of the disconnect and one of the more difficult things to really kind of, you almost have to accept at a certain point.
Yeah. One of the other, I think probably still the biggest hurdle in this space is what you mentioned, but even to kind of a larger degree, you look at one metric. Let's say we're looking at adoption. I'm looking at this coin, which is more adopted, and the other coin, which is less adopted, and I say that one is undervalued. It's has more adoption, it's cheaper. But then, taking a step back, what is cheap and what is rich in alts? Because some people can say that might be actually the cheapest in the group, and it's a good swing trade or it's a good buy. But as a whole, maybe alts are 99% overvalued. I just talked to Jeremy Gardner last week on the show. I had Chris Berniski on not too long before that. And it's really interesting to hear from them because they still have conviction in a lot of alts long term, and maybe not all alts, but a select few alts in the use cases of the blockchains they think make sense. Is there a world or is there a scenario? A lot of people say alts are overvalued 99%, whereas some investors still have serious conviction that these alts are undervalued, at least relative to the group. When can alts can alts go to zero? Is kind of what I'm getting at. Like, when would we see some alts could still be relatively undervalued, but the entire group could still be massively overvalued, some, being priced at $1 billion. Could alts go to zero, or do they just run out of liquidity? Like, what does that look like, and what's kept some alts from going to zero?
What's kept some alts is always been an interesting thing. I think part of it is helping, having market makers out there to kind of make sure that one-off sell-offs don't really create a cascade of price decline. But specifically, I think certain alts definitely have value, and I'm sure with Chris, I think is brilliant. I know they're big Decred fans, and I think Decred is definitely an interesting proposition. And I have a small stake, but realistically, I don't. Part of it is it all boils down to timing. And so it's not if, but when it'll happen. So I think Decred certainly has value, and the difficult thing about it is just getting more people to understand it. Part of it is that it's not a super sexy. This thing
it's not
will
sexy at all.
Gain mass. Yeah, it's not sexy.
It took me a while to even want to research it. I remember hearing about governance, and it was one of the things. I mean, when you get into the space, it's like, oh, decentralized exchanges, that's pretty interesting. Or like gaming, gambling, that's interesting. All these different things, and it's like governance. It's like, that's not, what is governance? And then you kind of just miss it. It's only after a while I'm like, okay, why is Jimmy focused on this? Why is Chris focused on that? It's funny you brought up Decred, but yeah.
Yeah, and I think a lot of smart people that I follow in the space are huge fans too, and I definitely see the value proposition. I think again it just boils down to when. And so if we're in a situation where Bitcoin kind of is going to run first, there's just incremental money is going into Bitcoin. It's really tough to justify anything else. And so again, it kind of becomes reflexive over time, and which makes the kind of investment case for Bitcoin relative to some of these alts a lot stronger. But I think there will be a time where you'll start to see, some of these alts die down. I think you're even starting to see, conviction, like individuals in the XRP camp definitely starting, like some people are starting to lose conviction, which is kind of crazy, especially when you think about, what was being said a year or two ago. And so I think that'll kind of gradually happen. You'll start to see, some capitulation. I know there's some people say that like there's a notion that the whole space has to get cleaned out. And I think that's ridiculous. I don't think it's binary that, Bitcoin can go up while there's still all this garbage there. I mean, even in the equity world where, it's pretty fair to say that it's a lot more efficient. You're still having these like penny stocks. They exist because people want to gamble. And so they'll always be there. And so I think a lot of the current, alt trading is just more technical based. You'll see traders moving in and out on certain setups, but there's no long-term conviction. It's kind of just them finding good risk return opportunities that they think set up well for a trade. And so I think we'll see a lot of these alts die out. There's just not a lot of natural demand for alts. And that's a bit of the problem, where a lot of it before was pure. I mean, all of it before was speculation based, and nothing really needed to deliver to drive price up. But now, because you're not having the dumb retail investor come in and just put money in anything that they read, you're starting to need adoption to really generate real demand for some of these. And so that's kind of been the difficult thing too, with even some of the ones like Leo and some of these exchange tokens, which on paper have great economic models. The problem is Leo's, so the whole premise is that they take 27% of revenue and burn the tokens until they're done. If they get the money back that was seized by crypto capital or that was stolen, if they get that back, then that'll be used to burn it. But if you look at what's been going on in terms of natural volume demand, they've burned 50 bips worth of supply in 2 months. So, and at a time when Bitcoin volume has been picking up, it's been negligible. Part of that is that you're starting to see so many exchanges pop up. So there's volume is getting spread out, and so a lot of new guys coming in, and so the problem is there's a lot less volume going to BitMEX, and so there's not as much there, and that kind of creates an issue because at this rate, you're never really going to burn a sizable amount of Leo, and part of that is it's almost you're paying for the option on the potential that they do get those funds back, and that's where some of the value is baked in. I think I personally also overestimated the amount of burn that we would expect, so I was pretty just they have like the website that they Leo transparency, I forgot what it is exactly, but which is really great. But the problem is you also get to see how kind of mild these burn rates are.
It's great if it's bullish.
Binance, sorry?
I said it's great if it's bullish, but
yeah, exactly,
so far it's not.
Exactly. Yeah. And so even with Binance, it's tough because they're going to burn. I think the move to not have because there were supposed to be all 80 million tokens on like a huge chunk. I think it was 80. I don't remember the exact amount unlocked in July from original employees and owners, and so rather than having that supply flood the market, they instead designate that they're just going to burn that. Problem is they're still going to burn 100 million. They're only burning 100 million to 200 million, so you still need enough natural demand to kind of support that other 100 million worth of supply. And then with the shutdown in the US, that's going to be tough because you're probably just going to see Coinbase and Binance just try and compete over that residual alt volume for coins that aren't deemed securities. Yeah. So the narrative for Binance is tough. FTX's token kind of followed the same situation where you had all these stages of investors who got in some like 10 cents, 20 cents, and then it starts at $1. It ran up pretty high, and then now it's down to like $1.26, $1.30, which is a pretty significant drop over just the past week. And so as those tokens are starting to get unlocked, there's a lot of selling happening for individuals who got in very early, but nowhere near the necessary demand to offset that. And that's kind of where it boils down to, is a lot of these alts need some form of adoption to kind of satisfy the kind of the restless or the individuals that have got in considerably earlier. And so that's honestly the biggest thing, the biggest issue. And that kind of also all comes back to ETH. I mean, a lot of the successful alts are on ETH, and the issue is that part of it is that there's economic abstraction where you'll see the narrative that all of Tether is on ETH and all of this like the amount of transaction volume that's going over it. But unless that leads to an insane amount of transaction fees to miners, so that incentivizes miners to go out there and mine ETH and own it. And so because that doesn't exist, that doesn't necessarily mean that just because all of Tether is on ETH, that doesn't necessarily mean that that's value is going to accrue to ETH or any of these other tokens. A lot of the value is abstracted to the token, and it doesn't really fall down to the base layer. And so that's kind of a concern, I think, in generally for ETH right now.
Yeah, it's factors going against tokens which had maybe wonky launch metrics. We also have the macro environment that's just not supportive. We don't have new retail coming in for a lot of alts. A lot of things stacked against alts. Thinking about two alts in the top 10, you mentioned ETH. I'm going to focus on Tron, TRX, and XRP. And it's because it's something that I've been thinking about a lot, and I'm curious your perspective. Since I've been around, and that was 2017, not too long, but I haven't seen a coin, in the top 10. And as you look back, like 2013, there was coins in the top 10 which aren't here anymore. But I've never seen a top 10 coin, just completely get evaporated and kind of disappear from the space. And I'm curious what, if there was an event like that, that would kind of shake the faith of a lot of other holders. I know that, some coins won't go to zero. It's just a factor of maybe that coin just literally stops getting traded, or there's no demand ever. And it just kind of is one of those things where if you want to exit, you're going to just continually get slipped 5-10% lower. Things like Tron and Ripple and TRX is going through their own list of problems with Justin Sun potentially, a Chinese government not taking too kindly to what he's doing. And then you also have XRP, which I think they have a lawsuit, and a lot of people are kind of losing faith in what XRP even means for a system where Ripple works, but you don't need XRP. What would XRP or Tron leaving the top 10, what would that do? Do you think that's even possible? Or the reason I'm asking, there's a weird idea in my mind of can tokens become too big to fail? Like banks were too big to fail, right? Is that a thing nowadays where Ripple is just too big to fail? They have a really big social army. They have, I'm sure, a massive war chest. Same thing with Tron. I imagine they have millions or maybe even billions of dollars to kind of support and continue running it. Same with EOS. They have one of the biggest war chests in crypto. Can tokens become too big to fail, or is everyone still at risk?
No, it's a great question. I don't think they can become too big to fail. I think part of that is because, with too big to fail, with banks, it was because of the systemic risk that their failure posed. So you're going to have the government step in because, yes, we have to use taxpayer money to bail out these banks, but the alternative is considerably worse.
Yeah.
So that's why they're too big to fail, because they're systemically important. And so, whereas with these altcoins, I mean, the war chest is great. It's really tough to, and I think back in 2017, I would have thought about it differently, in the sense that I would, they have this huge war chest. They can figure out a way to buy value to the token. But over time, you kind of start to realize that certain situations don't necessarily need a token, or there's a variety of reasons to not be bullish on a lot of these. But I think you start to realize that you can't buy your way into value. You can kind of buy your way using marketing to continue maintaining support. But I think over time, the marketing spend will be, unless we get a huge flux of dumb retail somehow, but that the ROI on marketing spend will go down. And so I think it'll be a slow bleed for a lot of these, where gradually people will lose hope because they can't use the marketing money, or they can't leverage their war chest to create this narrative for future value. And I think the risks of a Tether, of a Tron or a Ripple leaving the top 10 kind of boil down to why they leave the top 10. If it's a gradual bleed, I think that's probably the best way that it can happen. As much as dumb as I think a lot of these investors are, I don't want them to lose money. It's not a good thing. Nobody really wins there. So realistically, you hope it's a small bleed as more and more people start to either give up or lose hope or wise up a little bit, I guess. And so I think you'll have a lot there. Part of it is the volumes in some of these aren't crazy. And I think a lot of that is you have individuals who got in 2017, 2018, and just haven't looked at their accounts since. They owned an obnoxious amount of it. And I still have friends that I'll catch up with them and say, oh, so what are you in? And then they'll mention oh man. And so let's fix that. And so I can only imagine, how many other people like that there are that just gave up. And so they're just sitting in these coins, and that probably helps the value because it's just less natural sellers. But I think what will happen is people gradually kind of wise up and realize. I think there's still going to be, coins. I don't want to say shit coin. Yeah, shit coins. Like in the future that will blow up unreasonably. Part of it is greed. Part of it is they'll create a narrative that based on what we know at the time can come to fruition, but it doesn't. And so it just kind of depends on when you realize that it can't. Sure. And so hopefully they kind of slowly diminish. I don't really want to see that an exit scam, because that's just not good PR. Yeah, a nasty crash is just going to get eaten up by financial news and then paint the entire space with a brush that doesn't need to happen.
Yeah, I'm with you there. In terms of, you brought up one sector that I want to hit on before we wrap things up, and that was exchange-specific tokens, things like BNB versus Leo. And I think Delphi put out a report recently, which is why I want to talk about this topic. You guys put out a report breaking down the exchange tokens into 4 different things, and it was groups of tokens which give you discounted fees, some groups of tokens which almost give you a claim to revenues, like an equity, like a security, but they aren't a security. Um, there's all these different groups. What do you think? What's the best outright sector that we've seen so far? I mean, BNB is obviously the largest, but I think it's because they've also had the largest exchange. Is there something about exchange tokens which made them so hot earlier in the year, other than them just pretty much resembling securities? Like, what's the magic? What's the secret that had every single exchange rushing in there, and that has also led to them actually still being, I think, one of the best performing alt sectors of the year? I know alts haven't done too well, but as a group, relative to the rest of the group, they're still doing quite well. What do you guys see there? What does that report look at?
Yeah. Yeah. So we analyze returns, and so we will look at what the different tokens offer, how they've performed. We do an analysis around performance before and after burn dates to see if there are any actual actionable relationships there. But I think the reason that these tokens have had success is partially, so when we went through 2017, 2018, and the beginning of 2018, hope started to kind of die down for a lot of these tokens. People started to realize that a lot of the stuff was, there's no reasonable way that these things can actually generate the demand they need to satisfy the value. And so then people start to think, all right, well, what is actually working in the space? And the stuff that was working was, the things that didn't need technological breakthroughs and crazy scaling solutions that needed to work first before this token can actually realize its value. And so the only things that were really working are exchange tokens, because the only real use case for a lot of this stuff was speculation. So you speculate on exchanges, and it's like, all right, well, what's the natural way to kind of benefit from all this speculation? And one of the ways was exchange tokens. And so you have that, and at the same time, the exchange tokens did create a use case. I mean, I held BNB for a while, and part of it was always to just get discounts on fees. So when you're going to have,
some people have said that they're like, that doesn't need a blockchain. And I'm like, well, I mean, I would argue it's actually one of the few things that does make sense in this ecosystem is having these discounted trading fees. Whether or not people like that or not, that is the use case right now, is speculation and trading, and that's all I use a lot of these things for. So go on.
Exactly. And no, I totally agree. And so that's kind of, I think, the thought process and how that evolved. And then you see it started with BNB, and then other companies started to see the success Binance had, and tried to not necessarily ride on the coattails, but take a page out of the book and try and ride that wave. And so a lot of individuals started coming out with exchange tokens. There's an immediate use case that you can wrap your mind around very quickly. And so there's also a huge velocity sink for all the individuals that have to hold it to use it for fees. So
to get in the lottery, to participate in the IEO, literally lottery of when these things get listed.
Yeah, and I mean, Binance has always done well leading up to those lottery dates. Is you have to sit in holding a certain amount of those tokens, which is, it's always funny in the sense that you have to hold hundreds and hundreds of tokens that were Binance was like $30. You have to hold however many $3,000 increments of Binance tokens to possibly qualify for like $200 worth of
it's gotten
so
smaller.
It's hilarious. So it's like, well, a 2% move in your notional just eats away at all the potential profit you can get from those tickets. And the funny thing is, it became a reflexive and a meme, because a lot of US investors hold Binance, and I would buy into that and realize that I have no intention, because I can't even get access to these lottery tickets. And so it kind of just became trying to understand where the money is going to go. And so people started to realize Binance, exchange tokens work, so let's do that. But that narrative is dying off right now, and it's tough to really figure things out. I mean, DeFi is one that's definitely growing in prevalence, but DeFi has massive hurdles and handicaps. I mean, it's purely just people seeking leverage right now. That's really what it's all about. And you're never really going to bring new money into the space for DeFi. It's
strictly for
existing money. Existing money that wants to dabble. And so like your adoption ceiling is really limited. And so I think realistically, you need Bitcoin to really do well to bring money and adoption to the space, while these other tokens and protocols can hopefully try and build out the underlying security and scaling that they need to make what their dream is a reality.
Yeah, hopefully just try to survive in the meantime. One more thing with the exchange token before I ask you the wrap up question, I can't talk, is I've always liked, and I still think that exchange tokens will continue to do well, even if it's a formula that's been figured out and maybe too many exchanges hopped on it. But there's so many exchanges launching nowadays, and there's also now this risk of, I think me and you both agree on it, and I think a lot of other analysts will as well, of what if there isn't just a long tail? There's not going to be a million tokens or thousands of tokens that exist in 5 and 6 years. What does that mean for some of these exchanges? Will their revenues go down? Will not that many exchanges exist? So, in the current and in the 3 to 6 month outlook or in the yearly outlook, exchange tokens can still do quite well, and that's why so many exchanges are coming to the market. That's why they're adding leverage. That's why they're somehow still getting nice volume, and hopefully it's real volume. But in the long run, if there are less tokens as alts die out, what does that mean for their business? And does that also kind of hurt exchange tokens? What are your thoughts there? I mean,
yeah, no, I definitely think that's a huge headwind that they definitely have to, that they'll probably eventually face. I think a lot of them are starting to realize that Bitcoin for the foreseeable future is more or less the only game in town. And so you're starting to see Binance add margin trading, and because at this point, like, how do you gain sats? It's not really through alts; it's leveraged Bitcoin trading right now, and that's kind of where everyone's flocking. And so, I think exchanges will try and develop those types of products. You're starting to see them try and get very creative. So, FTT or FTX rather. Not like I can't use it just being US based, but like running through it and seeing all the products they offer, they're all pretty interesting. I know they have some pretty sizable fees, but they're offering a lot of really cool leveraged and derivative products to get
leverage tokens,
like all these exotic exposures that you really can't get anywhere else. And so part of it is differentiating yourself. I think that will be one way to help. I know Binance is constantly trying to tack on use cases, and each one is less useful than the previous one because the only ones that matter already exist. Yeah. And so it's tough, and they kind of have to differentiate themselves, hope that Bitcoin trading kind of continues, and I think they can survive on Bitcoin volume for a while, and that's why I think the general Bitcoin maximalist stance I don't totally agree with. I think I'm not personally investing in ETH. I don't think it's a great investment. Right now there's too many uncertainties, but realistically, I think it's very good for the space to have ETH work. It's not whatever value you think it eats from Bitcoin in terms of individuals thinking that it's a stored value versus Bitcoin is more than offset by the amount of new money it could bring to the space and new interest it can bring to the space. If you just look at 2017 alone, I mean, that was an Ethereum fueled rally. And so I think having that work is definitely very important. I think exchanges are kind of at the mercy of having some of these protocols work too, because they'll actually, then you'll have the infrastructure to support certain token use cases, and then it's speculation all over again, but with some actual natural demand for these tokens.
Definitely. To wrap things up, first off, been an absolute pleasure speaking with you and Kevin last
Likewise.
time. I love having the Delphi team on. We're gonna have to make this a monthly thing. But
Absolutely.
The last question is for people that missed the last one, or for people that are still listening to this first one or to this next one. Do you guys have anything in the works right now that's like the UTXO analysis you did for Bitcoin that can help people time the bottom for alts? What do you guys look at? I mean, are you guys even thinking about that for alts? Is there a method you guys are using or a technique you're thinking about? Or is it more, we're just going to wait this out and kind of see how it develops? Is there really even a method you can use there? Is it, value versus momentum, more traditional metrics?
With alts, it's a bit tough. Some of the stuff, and right now it applies more so to Bitcoin, but just tracking flows between exchanges. There's some really great data providers out there. It's a token analyst that provides really good exchange flow data. So combining that with understanding, it ends up being a situation where there aren't really these one-off metrics that can really tell you what's going on. You kind of have to use a mosaic of ideas and really try and piece things together there. I think in terms of alts, it's tough right now. I think you still need Bitcoin to substantially go up to bring in retail money. And once retail money starts to come in, you'll see existing money also flow into alts because they realize where the money's going. And so
Yeah.
it just ends up being this cat and mouse game of where is the money going to go next. And that's where you kind of have to be. And so I think you need Bitcoin to really rally to bring in some retail money. And at the same time, you need some of these alts to actually work. I mean, I think all the payment tokens are garbage. A lot of that stuff is useless, but there are individual alts that really have value, whether it's a Decred that is a stored value, or some of these other
Protocols,
use tokens. Yeah. And so work tokens, exactly. And so seeing some adoption there would be nice, or at least enough to drive demand. But in terms of really trying to time an alt bottom right now, it's tough. There's, like you mentioned before, there's not really going to be, I don't think there's alt windows where, you can find setups where Bitcoin's range bound and certain other factors are kind of leading you to believe that alts can do well. But I think before we see the next substantial alt season, we need a lot more appreciation from Bitcoin.
Yeah, makes sense.
You kind of have to accept that it's going to stay flat, and then you're comfortable, going out in the risk spectrum.
Yeah. It's really good to hear, especially from a firm like you said. You guys are an independent shop. You can stay objective. I think that hopefully listeners can also stay objective now with their holdings in terms of, am I just averaging down? Have I been averaging down for 12 months? Is this an investment? Is this a trade? So hopefully this conversation provided some value. Yan, thank you so much for coming on, man. I always enjoy talking with you guys. Thanks
really
for your time.
Appreciate the time. Thank you for the opportunity.
Yeah, of course. This was fun. And for everyone else, thanks for tuning in, guys. We're out.